Monday, August 4th. Market analysis, Stan Ehrlich. We start out with stock indexes, go to futures, and then some stocks. Now, last week, we not only had, in some cases, a Tuesday bearish engulfing ERSignal signal, but on Thursday last week, we had another one, the one that's now the dominant one, the profound one. The one on Tuesday didn't work. Small losses. The one on Thursday was much, much better and produced a very big break to the downside, which made new lows for weeks. But at the same time, the low of the day, as I pointed out on Friday, was at a support level. The lows that were made only just a few weeks ago in early July to the middle of July. So that was a little bit of support. Plus, on a longer term basis, several of the indexes have come down to approximately the highs that were made in November, December, January. Support. So a combination of recent lows and older highs, creating a little zone, created the lows that we saw on Friday, which none of the indexes, made new lows today at all. None of them made a lower low than Friday. But the Russell made it a little bit higher than Friday's highs, and the gap down on the SPY and the QQQ, which only trade from 6:30 California time to 1 o'clock, leaving a big gap behind on Friday morning. That gap was closed today. So let's go from the E-mini to the 5-minute chart. Normally I show 1 minute to give you a perspective of where we are on this rally relative to about 2 days, 3, 4, 5, 6, 7, about 7, 8, 9 days ago, which in fact, we are only back up to some highs or lows. A little level of resistance. Yes, I'm well aware it was on the close, but I wouldn't be surprised to see the reopening be relatively steady and then start to go right back down again. Period. Spider came up, closed the gap from Thursday to Friday last week. That's done. Told you gaps are almost always closed. This took 1 day. Now it's critically important, if you are bullish, I'm not, that the market hold the lows of Friday, because if we break those lows, we will more likely than not be breaking the new low ground since the beginning of July. Approximately 4.5, 5 weeks. It may not happen tomorrow. It may happen later this week. But that's the key level for anybody that would be intermediate to longer term bullish. Short term, that's much different. So I expect to see, and I do expect it this week, to see closing prices below 16, I don't know, what is this, 16, 17 on the E-mini or the Spider, 617 on the Spider. Next, the Spider's rally did the job, closed the gap, came up to the low of Thursday. Done deal. Next, we've got the gap being closed on the QQQ. Of course, 6:30 to 1 p.m. California time. That's done. Like I said, likely. Although it was pretty substantial, I really didn't expect it to happen all in 1 day today, but it's now history. So if we continue to get stronger, the fail-safe stop, even though you're not very quick, and I am, to lower my stops when I have profitable positions to prevent losses. Limit your losses, let your profits run, my motto. So the higher you go, the worst case scenario, wherever you're short from, in my opinion, would be a stop above the high of Thursday. That's a new historic high. We have to stay up there. So you got to be careful about your stops. If you get stopped out and the market turns around and comes right back down again, oops, maybe that's not a great idea. Maybe you want to get out on the close if it stays above historical highs of Thursday. Some variation on that concept. Next, the rally closed the gap just barely toward the very end of the day. NASDAQ futures came all the way back up to the highs of Friday. Not I believe, not quite in a new high ground. And if it did, it's just a tiny amount. I'm not sure. I don't think it did it. And again, I wouldn't be surprised to see it open steady or lower and start to drop and make new lows sometime this week. Certainly, if not this week, soon, very soon. Next, 5-minute chart, NASDAQ futures up to basically some resistance. Could be a little bit higher, but not much. Certainly not very much into the range of Thursday. Next, YM. Slightly higher high in the Dow. No big deal. It did bounce off a support on Friday. I talked about that. We did break out of a little hypothetical double top. Coming back up as far as it did today would be, frankly, a no-no. You're not supposed to go back up above the lowest low between the two highs, the double top downside breakout level, which it did. So now we're kind of in a little no man's land with the YM. Never made new historic highs, sort of a little double top. So I do think it's going to turn around and come back down. Now, I realize most of these indexes are oversold, but the volatility has definitely increased starting Thursday, if not even a little bit before that. So expect until things die down a bit that your volatility is going to be higher than it was the beginning of last week and earlier, when this market went starting lack of upside momentum, which is pretty much the early part of July. So volatility is increasing. Next, YM, basically what I just said. Next, we've got the Russell. Friday bounced off support level, opened around unchanged. No lower lows to speak of at all, frankly. A little bit higher than just Friday's highs, but in a resistance area. So maybe it'll rally up to the top at 22.53. I don't even think it's going to do that. And then the 5-minute chart. Okay, let's go to bonds. We have a very small upside breakout on Friday with a very bullish, large, I should say, outside trading range up or bullish engulfing. Too bad it wasn't green. It wasn't oversold within the last previous days of allowable days. Secret. And now another higher high and higher close, even above Friday's highs. The minimum upside objective for the small pattern is now not too damn far away at all. That would be a price of 1690, 1680. And we're already at 1530, almost 16. So one more point. So we have also crossed above the neckline of the larger head and shoulder bottom, which started to form in early April. And that minimum upside objective is 122 plus change. So at least 122 plus. That could trigger off something much more bullish longer term. I'm obviously bullish on interest rate futures. We're breaking out of a couple of head and shoulder patterns, and the bonds notes are doing very well. It did make a few ticks worth, a new high since looks like April, and a new high close. Looks like it's coming along great. Big bullish engulfing Friday. I'm bullish. What can I say? I expect to see the major resistance areas being tested at 114.12, and closing above that would just get more bullish. Now, this is not going to happen this week or next week and so on, maybe not in August. But certainly this kind of situation is the forerunner, technically, of something that might last months. Next, crude oil dropped off even more, got overbought. No particular reason for it to top out where it did. Didn't catch the turn. So it's testing support. Let's see if it can break down to the support level, the next support level. And I'm kind of slightly bearish. I don't have a real strong opinion here. The trend down in the natural gas is working great. This is a new low. This is a new low close. I'm a little worried about it being oversold. That implies that it's supposed to rally a little bit. It's a little ambiguous as to how much. You got to use other tools to figure that out. And a resistance is obviously a good one. 3.2 may stop it on a bounce. But we could drop off another day or two more or get a little bit more oversold also. The point here is the head and shoulder top formation, which broke out on June 26th, and I know, or actually June 25th, that I talked about this at the time and forecasted this move, which is well underway. 1/3 probably the minimum downside objective, which is way down at 1.1.5. So we're coming along just fine on this pattern. It's working perfectly. But we're oversold. Watch for a bounce. Now, heating oil. New low for about a month. Nothing particularly huge about that. We have lower highs over time, or higher lows over time, sorry. But recently, because of the big bearish engulfing ER sell signal on June 23rd, this rally got overbought, stopped the rally. We have another sell signal. That didn't work quite right, so I can't claim any credit for that one. And we made new lows. So I'm liking the fact that this bearish engulfing is bullish. Bearish, what am I saying? Bearish for maybe a month or two or three or four to come. I don't know how long. Sometimes these are horribly profound for 6 months or a year. I can't tell that the time they happen. All I can say is it's going to go down until otherwise situations develop. Next, gold. Nice bearish engulfing on the top of the rally, July 23, but we're coming up some. We're between a rock and a hard spot. I've been saying that for a while. And that resistance level above is 35, 35.50, a little bit under that, but you get the message. There's the yellow zone up here. And the support below has held it when it dropped off to it. So until it breaks out of either one of those, which I favored at the downside because of the bearish engulfing ER sell signal on July 23rd, I'm looking for a turn down, support to be tested again, and probably broken. Next, soybeans. Nope, silver, SI. Bounced a little bit, nothing going on. Maybe it's building a top. Remember, there's a chance, but I'm so premature with this, that this is a shoulder high over here on the left around the middle of June. Both of these highs could be important. Certainly the highest high is usually the only one important. And we don't have much higher to go to match it, but it doesn't have to match. It can be a little bit above, a little bit below. Sometimes I draw a neckline under the bottoms, and I'll do that right now, just in case. There's your possible hypothetical neckline. I really don't like this, mostly because it's way too early. We want from the top of the market, we've only had about a week and a half. We want another month until this bottom tops out, and no higher, not much higher than 37.78, and that's confining it too much, so it's not going to happen. I'm actually going to erase that. The trend is up. You got higher lows. You got higher highs. I don't know. Let's just watch. I don't have a strong opinion, but maybe a little bit bullish. Platinum dropped off quite a bit, got oversold, bounced a little bit today. No particular reason for that to be the lowest low, but it has been as of today. A little bit more bounce, probably stop and come down again. Next, don't have a good, strong opinion. Now, copper is a weird one. It got clobbered on, what was that, Wednesday of last week. And on Monday, we had a signal that it was bearish to begin with. And on Wednesday, we had an unbelievably, the largest down move I have ever seen to my memory, probably ever, in copper in one single day. Now, that's the low of the day relative to current or historical price ranges, etc., statistics in general. So that's a killer, in my opinion. It's so big, it's ridiculously big. We could go sideways or up slowly for weeks and then crash again longer term. I'm bearish, can't help it, but we're oversold at the moment. So a little bit of a rally could easily come back up, I suppose, to maybe 4.9. I have to be a little bit friendly and cautiously, because this bearish engulfing is so unbelievably profound. Next is silver. Oversold, bounced a little, resistance, stopped the rally. I got to look for lower levels. We've seen lower lows since early April, and the lows in April are probably in jeopardy. Oversold conditions Thursday, Friday, today, and Wednesday of last week also should lead to a little bit of a bounce, but we got resistance above the market. Not much, not for very long. Grain, yeah, that's soybeans. I don't have any hope. Grain markets, everything but soybean oil has been looking good. We'll see soybean oil in a moment. And here it is. Soybean oil. Lower low. No fatal damage yet to the head and shoulder bottom, which got already over 50% of its minimum upside objective, which is 62.62. So if it doesn't turn around soon and it keeps sinking, then this pattern is going to get canceled. But at least I made it halfway. I'm still bullish to 62.62. This little dip is not fatal yet. Looking for a turnaround back up. Next, nice rally in soybean meal. Still, no hope. Maybe it'll get up a bit more, get overbought, and turn into new lows again. I doubt that it's going to get all the way back up to 298, the major resistance level. Next, corn. What can I say? New low close. Looking for lower levels. Wheat, new low, steady close. Looking for lower levels. Although wheat is oversold, so that one is not much higher. 533, maybe a minor bounce. $17, $18, $16, maybe down after that. And we've got Shell, our first stock out of 4. Support held. Not doing anything significant today. Neutral. Next. Oversold. A little tiny bounce today. Still oversold. Maybe a little more bounce. This is between a rock and a hard spot. Apple. I frankly expect the support level to be tested, which is 198 down to about 195. Maybe this week. Next. We tried to break out, closed right smack at the bottom of the pennant formation on Tesla on Friday. Although we broke the support a little bit, but didn't close below it. So today we bounced back a little. We're still inside this pennant formation. I really doubt that it's going to come back up to the top of the pennant, but if it does it now, it's going to be also a horizontal resistance level at the same time. I'm looking for a downside breakout. NVIDIA, rather a fantastic sell signal on Thursday, dropped on Friday, tested a bull trend line, bounced a little bit today. I think this bounce is all she can do, and I'm looking for NVIDIA to come back to the trend line, break the trend line, make lows lower than Friday's low, and start to drop off a chunk, maybe down to 150s. And you guys have a great trading week and profitable trading to you.